Welcome to Explain the Charts, where we break down the news and chart data to help you make informed trading decisions. Today, October 20th, we're taking a deep dive into the NZDUSD, the New Zealand dollar against the US dollar. Recent news and events have sparked a lot of volatility in the NZDUSD pair, leaving traders wondering where it's headed. We'll first look at the news headlines and then dissect the charts to understand the technical picture and how it correlates with the news. Let's start with the news. The Kiwi has been on a downward trend in recent days, reaching two-month lows against the US dollar. This weakness is partly attributed to the Reserve Bank of New Zealand's, RBNZ, aggressive rate cut, signaling a more dovish stance. Meanwhile, the US dollar has been strengthening, fueled by expectations of smaller Fed rate cuts. The current rate of NZDUSD is hovering around 0.60684, down minus 0.06% in the past 24 hours. Market sentiment appears to be bearish, with some analysts predicting further decline towards the 0.6000 barrier. Traders are also closely watching comments from Federal Reserve officials, which could impact the US dollar's direction. While the news suggests a bearish outlook, we need to see how these events are reflected in the charts to get a clearer picture. Now, let's switch to the daily chart of NZDUSD and analyze the technical indicators. The first thing that catches our eye is a clear downward trend, confirmed by the series of lower highs and lows over the past few months. The recent decline has broken through a key support level near 0.5900, which strengthens the bearish bias. However, we also see some signs of potential reversal. The RSI indicator is approaching oversold territory, which could suggest that the downward momentum may be waning. The Bollinger Bands show a narrowing range, indicating a potential decrease in volatility. These indicators hint at a possible bounce back, but it's crucial to consider the overall downtrend and the strength of the US dollar. We need to look at the smaller timeframes to determine if this potential reversal is a viable trading opportunity. Let's narrow down our focus to the 1-hour chart. Here we can see that the price action has been more volatile, with several up and down swings. However, the trend remains bearish as the price continues to trade below the 0.6000 level. We can see a strong resistance level around 0.6080, which has prevented the price from breaking higher in the recent sessions. The 1-hour chart confirms the potential for a bounce back, as the RSI is showing signs of oversold conditions. The MCD indicator is also trending downwards, but may soon cross above the signal line, suggesting a potential shift in momentum. It's important to note that the 1-hour chart shows a more dynamic picture compared to the daily chart. This suggests that there could be some short-term opportunities for traders who can capitalize on the volatility, but it's still crucial to remain cautious. Finally, let's take a peek at the 15-minute chart to see the most recent price fluctuations. This chart reveals a high degree of volatility, with a series of rapid up and down moves. The recent price action is indicating a potential short-term bullish trend, with buyers showing strength in pushing the price higher. However, the 15-minute chart is too short-term to draw definitive conclusions, and it's crucial to consider the longer-term trends. This short-term bullishness could be a temporary pullback within the larger downtrend. The overall technical picture suggests that the NZDUSD pair is likely to continue its downward trajectory in the near term, as the bearish sentiment is strong. However, there could be opportunities for short-term traders to profit from the volatility. To recap, the news indicates a bearish outlook for NZDUSD, with the US dollar strengthening and the RBNZ's rate cut contributing to the Kiwi's weakness. The daily chart confirms this bearish sentiment, showing a clear downtrend and a break below the 0.5900 support level. However, the RSI and Bollinger Bands show some signs of a potential reversal. The 1-hour chart highlights the volatility, indicating a potential short-term bounce back, with the RSI showing oversold conditions and the MCD nearing a bullish crossover. The 15-minute chart points to a possible short-term bullish trend, but it's too short-term to draw definitive conclusions. In conclusion, while the overall technical picture suggests a bearish outlook for NZDUSD, there could be opportunities for short-term traders to capitalize on the volatility, but with caution. Key price levels to watch are the 0.6000 support level, the 0.6080 resistance level, and the 0.5900 support level. If the price breaks above 0.6080, it could signal a potential shift in momentum, but the bearish bias remains dominant. If the price falls below 0.5900, it could confirm the continuation of the downtrend. Traders should closely monitor the news and events related to the RBNZ and the Fed, as these factors can significantly impact the NZDUSD pair. Stay tuned for our next analysis, where we delve into other key indicators and provide a more detailed outlook on the NZDUSD pair. Thank you for watching Explain the Charts.